Welcome to Health Business Mastery, the Creative Thirst podcast. I'm your host, Bobby Hewitt. Hey, welcome to today's episode of Health Supplement Business Mastery. Today, I'm bringing on a guest, Michael Sendrovich. Michael is an expert in getting insurance for supplements. So we're going to go deep into why you need insurance, what you think you have and you don't have with insurance, and really kind of unpack the whole insurance world. Michael, welcome to the show.
Thank you for having me.
Yeah, you're welcome. So tell me, let's maybe start at even a higher level of what is even insurance for dietary supplements?
Well, it's complicated, and also at the same time, it's not complicated. It's a pretty straightforward topic, but when you actually delve into the where ways that insurance can work for you and not, that's where it gets a little bit more complicated. But overall, what we're talking about is insurance that protects you and your business if there is a claim made against you as a result of your product. A lot of folks think that they're covered for products insurance, or their product, if they have a white label manufacturer, they're like, oh, it's the responsibility of the manufacturer. Not at all the truth. You are the brand, you are representing the product, you are making the claims and the statements about your product, and therefore you're on the hook. So if there's any injury associated with your product, whether it be bodily injury or property damage, and we can go into the differences, of course, you're on the hook for that. And that's why you should have general liability insurance. And really, a lot of times people confuse general liability with what's called products liability. It's actually the same. So general liability has products liability built in if you bought the right thing. But if you didn't, you may not have products liability and have something called premises only. And that's effectively a useless policy unless you have a supplement store that sells other people's supplements.
You mean like a physical store or a digital store?
Yeah, exactly. Like a GNC or, one of those types.
Gotcha. But if you're selling online, direct to consumer only, then it doesn't apply?
Well, the premises doesn't really apply because premises is slip and fall. So if you're shipping the product out, it's unlikely someone's going to come. Let's say if you're operating out of your home or even a warehouse, if there's no one in a warehouse, I would argue that yes, you would need premises, but let's just stick to the whole home thing. If you're operating your business out of your home or an executive suites or whatever, if you have someone come to your home and if they sustain an injury, then it's likely your homeowner's insurance or your renter's insurance that's going to take care of that. But if you were to occupy a space, say a warehouse or an office or retail, whatever it may be, the premises side is what would take care of that injury.
Okay, so let's say you're selling supplements online, right? Direct to consumers. Let's say you have a Shopify site.
Mm-hmm.
So nobody's coming to your house. There's no place of business. Maybe you're a drop ship, or maybe you have a custom manufacturer who's shipping 3PL for you, right? You're not dealing with any customers directly physically. So in that case, what would liability really include in terms of insurance or liability coverage?
That's a good question. So the general liability includes or excludes what's called products liability. So you have to be careful with what you're buying. So, a lot of times folks buy stuff online, and the online stuff, the reason it's so cheap is because it doesn't include the product coverage. So it's effectively just the premises liability, which is, like I said, if you have a store, fine, that's effective coverage in case of a slip and fall. But you really need what's called the products liability coverage, which is when you look at policies or quotes, you'll see that there's a little section there, and it'll say products and or completed operations aggregate. If you have that, you're probably in good shape. When I say probably, there's other aspects of that to be discussed, but we'll go in that direction if necessary a little bit later. So the products liability takes care of injury or any kind of associated claims or issues with your product, right? So let's say if you're manufacturing, for example, like creatine gummies. Okay, so it's creatine. It's one of the most studied substances on planet Earth. People are like, look, if you follow the dosage, then you'll be fine, right? But there are some studies that show, for example, that creatine is correlated to some kidney issues if you take it in really, really high doses. So if you have a creatine gummy and someone decides to buy your gummy and takes the whole bag all at once, and they have an adverse reaction, well, you actually may still have liability there. So that's where products liability can trigger potentially if there is a claim. And now when I say potentially, you'll hear kind of vague answers from me, unfortunately. When it comes to will this cover or will this not, I'm more on the cautious side of saying yes or no, because ultimately we don't know how things will play out and we don't know the details of what actually happened. And that can cause coverage issues. And that's really where it's important to have a really good broker. Some people know us as agents, brokers is a slight difference. Really, we do the same thing. It just depends on the representation. But it's really important to have that product's coverage, because even if people don't follow your dosing instructions and there's an adverse reaction, they can litigate against you. They can sue you. They can file a claim.
Yeah, I mean they can pretty much sue you for anything,
Yeah.
right? Even if they do follow the dosage instructions, right? If they get their hands cut while opening the
For
bottle, they
sure.
can sue you.
Yeah. Yeah, for sure. I'm married to a defense attorney. She does insurance defense. Funny enough, people kind of joke about that. And believe you me, I've seen some stuff. Now, obviously, I don't see details because my wife is the utmost professional attorney I've ever met, and most of them are not. No offense against attorneys, but she's just so committed to the client and making sure that they can settle things pretty quickly, which is actually a very good thing, because you don't want lawsuits to really drag on. That's where they become really expensive. But I've seen it all. If you can think of an injury, or if you can think of a reason to sue, whether it be legitimate or illegitimate, to file a lawsuit is really not that big of a deal. And once that lawsuit is filed, you're going to need representation. And a lot of times people don't know that the insurance company, that's what they're there for, is if the claim is coverable, and you'll hear me say this a lot because sometimes they're not. If the claim is coverable, then the attorney gets assigned to you, works for you and the insurance company. So there's a double representation there, but it's a good thing because everybody should be on the same page. And the insurance company will actually pay that attorney to represent you. So you don't have to go out of pocket. And funny enough, we've seen many cases where people don't know that that's the case, and they'll hire their own attorney. And that attorney has no idea what they're doing, because in most cases, insurance defense is very specialized. So they may not be an insurance defense, attorney at all. And all of a sudden, you've got 3, 4, 6, 8, 10 months of pretty much nothing and just fees, fees, fees. And then, finally they call me and they go, "Hey, I've been going through this thing." I'm like, "Why didn't you call me when this whole thing started? I could have given you some direction on who to call, or maybe give you some advice here and there." I'm pretty limited on the advice that I can give because I'm not an attorney. And, we as brokers, agents, we can only sort of give you like kind of factual stuff. Like, here's who you contact, because we don't handle the claims. Some insurance agencies may, we don't, because every carrier that we work with has their own claims process. So that, kind of is a little bit of separation there, but at least we can kind of give you some, hey, like you should do this or you should do that. And we also typically give you that at the beginning of the policy, because that's really important, because insurance contracts are a contract and it's a two-way street, right? So as long as you fulfill your end of the bargain, the insurance company would probably, do a good job of representing you, hopefully. In some cases, that doesn't work that way, because not all insurance companies are created equal, and not all claims adjusters are created equal. You can have a really great claims adjuster or not so good one. But anyway, I kind of went on a tangent there, but hopefully that's
Yeah,
enough
no
information.
worries. Yeah, no worries at all. Like, so why would a supplement company even need insurance, right? Like, other than, taking too much. Um, of course you can get sued for any reason whatsoever, but why would they even need it?
Well, you kind of hit the nail on the head. I mean, you can be sued for pretty much any reason. And depending on your product, insurance is really, relative to what it provides, is not that expensive. I know people complain, it's like, "I'll never use it, I'll never see it. It's just money in the wind," right? I disagree, and not just because I'm an insurance broker and I sell insurance policies, but basically insurance, the reason it's called general liability is because it's pretty general coverage. Now, with regard to products, right? Even if you have a very, very low risk product, doesn't mean that your manufacturer is doing what they're supposed to be doing, right? And how do you really protect yourself against that? And in fact, we've seen issues with recall, and recall is a separate insurance that can be included on a general liability policy, usually, depending on the type of, we call it risk, so the type of company or the type of product. Sometimes we can include it, sometimes we can't. So there's just a whole multifaceted kind of thing. Listen, if we don't have enough time, I can tell you that, for me to go through every potential reason as to why you should have liability insurance, because it's really that important. One of the, for example, kind of reasons to have it is you're probably not going to be able to do much business if you don't. If you're selling on Amazon, if your numbers are at a certain tier, they're going to make it mandatory that you have this liability insurance, including products liability. And so, whether it be Shopify is kind of interesting. Excuse me. I've seen them ask for insurance and I've seen them not ask for insurance. So it's kind of, they're a little bit more or less complicated. But we have, for example, manufacturers of pet supplements. So why do they need product liability insurance? Well, if the pet is injured as a result of that, because pets can eat quite a bit more than they're supposed to, that's also, a liability risk. And the fact that matters is insurance. The way that I look at insurance, I kind of look at my whole philosophy on business this way: is if I have the right things, if I have the right tools, then those tools should make my business grow, right? Like me being on your podcast is a tool that I'm going to utilize very, very well. And thank you for having me again.
Sure.
So having insurance can be used as a tool. And believe you me, like, companies know which carriers are better and which carriers are not, because they deal with them. So certain carriers have certain reputations. I won't tell you who they are because I don't want to get in trouble with the carriers. But the bottom line is the insurance companies, they're great, but they're great to an extent. And we really want to make sure that we hit all the right kind of T's and I's and really notify the insurance company what kind of risks we have with the potential supplement. And that way, whoever it is that you're working with is going to be more comfortable working with you, because the way that lawsuits are funny, when you have a lawsuit, you're probably not going to be the only one in the lawsuit, because there are so many different factors in that particular lawsuit, or just lawsuits in general. How was the product sold? Who is it sold through? Who manufactures the product? The insurance companies will ask you that information, and then they will either countersue or try to get money from some other party. That's just the way that this world works. So, when you're dealing with an Amazon, the reason that they ask you for liability insurance is because they just don't want to deal with having to pay that out of pocket, right? So I say, listen, if you want to sell on our platform, that's wonderful. If you can get insurance that gives you more credibility as to like the legitimacy of your business, and also the fact that your product is safe enough to be on our platform.
And does that come down to how the insurance is classified?
Yes, exactly. So I'll break it down for you kind of in a couple of different categories. You have products that are high risk, medium risk, and low risk. Right. So, for example, things that have been really studied and things that generally have very little side effects would be considered low risk, and things that are, maybe a little bit less studied or maybe quote unquote problematic. The best example I can give you is Kava. Kava and Kratom, for example. Can you insure Kava and Kratom? Yes, it's very possible to do that. But Kava, excuse me, does have side effects, and depending on who you ask and which platform, you kind of look in as far as the research, it could either be beneficial or very not beneficial. So carriers, of course, assess that. And the way that they assess that is you will have to fill out an application. So when you fill out that application, if you use the right application and if you use the right broker and or agent, you will see that the application is pretty thorough. So it'll ask you, for example, does your manufacturer, if you have a manufacturer, unless you're doing it your own self, do you follow good manufacturing practices? And if that's the case, great. If you don't, it could be a little bit more difficult on the underwriting, and that probably increase your premium because the carrier is now assuming more risk. So really everything is classified by what you make and how you make it. A soap manufacturer is going to be classified as soap manufacturer. A supplement company will be manufactured as supplements, right? Or for example, peptides. Peptides, I'm a little bit more anal retentive when it comes to classifications, because funny enough, in the insurance contract, there's usually, overwhelmingly, a clause that states that if you are outside of the definition of what you reported to us, we're not obligated to cover you. So we want to be really crystal clear, either by the application that we submit or what's actually written on the quote. Like it'll say, we have many manufacturers of BPC. BPC 157 is very popular right now. So we actually put in the quote BPC 157. We want to make sure that it's actually written out there. And some carriers will do it, others won't. And we present the different carriers to our clients and say, look, these guys classified it. These guys classified it as such. Whichever one you're more comfortable with. And there may be price differences and, of course, quality of carrier. And then, of course, ultimately the client decides, because there are pretty big swings in premium because of that. And specifically, like say with online, when you're buying stuff online, the reason I utilize a lot of the online platforms myself, funny enough, because all the platforms that you, for the most part, you get access to, they actually solicit guys like me and say, hey, can you also write business through us? They basically underwrite a product and then we submit applications to them. And if it's us versus the client doing it, we will usually get declined on those online platforms, and the client doesn't get declined. They go, well, why didn't I get declined and you got declined? Well, because we know how to ask the appropriate questions and to classify you appropriately. Whereas if you do it yourself, you're probably going to have an issue. I had this exact situation happen earlier in the week where I'm quoting a guy and he's doing gummies are like in, I don't know if that's.
Oh yeah, gummies are big.
So he's doing gummies, and essentially what they do is like extracts from fruits and vegetables, and they take the vitamins from the fruits and vegetables, make it into gummy form, and they sell it. So apple cider vinegar, so on and so forth. So he contacts me, and he's got pretty specific insurance requirements because he's got enough volume where Amazon is asking for a certain limit of insurance. So I got him a quote. And he comes back to me and says, hey, how come my quote that I got online is like a third of the price of your quote? I said, well, it's probably because it wasn't classified correctly. I'd like to see what it is that you got from these online platforms. He sends it over to me, and they put like food manufacturer, candy manufacturing or something like that, if I remember correctly. It's not the same thing. It's not the same thing at all, because candy is obviously much lower risk than, say, if you were to have a vitamin overdose or something like that, right? Yeah, okay, you may have a sugar high or a sugar crash, but you don't really overdose on sugar. Whereas with vitamins, you can overdose on vitamins. You can hurt yourself pretty badly if you're not careful. So we really got to make sure that when we're working with a client, or if a client's asking for advice, for example, people contact us and we're not licensed in the particular state that they're in, and we have to reject the business, unfortunately. So we'll still tell them, listen, this is what you need to look out for. Find a broker that is willing to ask these questions. And when they're willing to ask these questions, then you could probably breathe a sigh of relief knowing that they probably know what they're doing.
So as a broker or agent, do you actually help them fill out that application?
Yeah. So a lot of times when you have applications, the wording is kind of funky and tricky, right? And they go, well, I don't know how to answer this. So of course we work through that. Generally speaking, the applications are pretty straightforward. It's not a very complicated thing if you don't make it very complicated. Some carriers.
Well, I imagine it's a situation where it's like you don't know what you don't know.
Right. And that's the reason why we have licenses. We have to have an insurance license in order to do this. So we have to be thorough.
So your recommendation would be not to go online and just fill out a quote and just buy the cheapest one then.
That is correct, unless you have a very specific circumstance. I know we're talking supplements, but let's say you're not doing supplements. Let's say you have an ice cream shop. If you have an ice cream shop, sure, have at it. Get your premises liability policy for slip and fall and serve your ice cream all day. You probably should still have general liability because it's food service and contamination and things like that. But, I don't want to overcomplicate things and say, like, you should always have products in there. Yes, you should, in my opinion. But sometimes people are starting businesses and they just don't have cash flow. They just don't have any money to start with, very bootstrappy. So they get the very bare minimum thing. And yeah, it's better than nothing. But a lot of times people are surprised by how cost-effective insurance can be. And look, you could pay it monthly. You don't have to pay everything up front. So talk to your broker, have the options presented to you, and then make the decision that's best for your business. Ultimately, I think a lot of problems within the insurance world is brokers are typically not very business, funny enough, familiar, um, because most brokerages will do everything, right? Like come to us for your homeowners, for your health insurance, for your dental insurance, for this, for that. I would recommend finding a commercial brokerage. Like we're just a commercial brokerage. We don't do anything personal. We partner with companies, but it's on a referral basis. So if someone's looking for, like, say, health insurance, we've got a trusted partner. Hey, contact them, and then that's the way that you would work that out. But if you find a good enough, you'll know. If they're asking the right questions and if they really take the time to explain to you what you're buying, probably a decent broker.
And is there a difference between a broker and an agent?
There is. So agents represent insurance companies, brokers represent businesses and individuals. So an agent would be someone like a Liberty Mutual agent or a State Farm agent or an Allstate agent. They're what are called captive insurance contracts and non-captive insurance contracts, like independents, basically, which is what I am. So when you see, like, for example, a farmer's office, if you go inside the farmer's office, they can only transact farmers' products or something that's owned by farmers insurance. Whereas with me, I have access to 100 plus insurance companies through various underwriters and various wholesalers. Insurance is pretty much like any other business. There's a middleman for every middleman. So like I would be considered like your storefront, your retail. And then when I need a product, I go through either wholesalers or underwriters, and that's who I get my products from. And obviously that's what I present. So a lot of times what'll happen, you'll see a proposal coming from us and it'll say Zager Insurance on top, but slightly below it'll say like X, Y, and Z insurance services or whatever it may be. So that's the wholesaler. That's how we're able to get that product.
Gotcha. Now with a supplement, I mean, you're not encapsulating these things in your kitchen. You're using a third-party manufacturer, and now that third-party manufacturer is getting their supply, their raw ingredients, right, from all over the world. So your supplement potentially have 4, 5, 6, even more, blend of ingredients that each come from a different part of the world. Now, how does the insurance play into those different like sourcing of ingredients, or is it all bundled under just the product?
Right. That's a fantastic question. In fact, there is a question about that in the application. Are any products imported? Sometimes sometimes you don't. And really, that's
because a lot of times they won't disclose that. The manufacturers sometimes don't disclose that. They're buying in bulk a lot of times, and they're just sitting on that raw ingredient.
Right. Yeah, I mean that's where GMP really comes in. So that's a conversation to be had with your manufacturer. So most of the time, and again, this depends on the carrier because every carrier does things differently. And just to clear things up, a carrier is the insurance carrier, the insurance company that's affording you the coverage. A lot of times it's misunderstood that when we sell a product, we're the ones actually going to pay out in the claim, but it's not. It's going to be the insurance company. A lot of times carriers, what they do is they have their own way of doing things. Some will kind of turn away and say, fine, whatever, it's not a problem. Others will be very specific about that particular underwriting question. And we've had instances where clients working with a particular manufacturer, and then 3 to 6 months later, they find out something's problematic and they move to a different manufacturer. And that's actually a really important detail for us to know, because if you're going from one manufacturer to another, we should report this to the insurance company, because if there are claims with the previous manufacturer, then we should go, the insurance company would say we should go after the previous manufacturer, right? So one thing that we really advise people to do is, especially if it's an overseas manufacturer, is get the insurance from them. And we don't recommend overseas manufacturers. Sometimes people don't have an option because, when we're dealing with the United States, we're dealing with the United States. Even Canada, our laws are very similar and our litigation is pretty similar, the way that the legal system is structured. When you're talking about overseas, for example, stuff from China, when you have a lawsuit, it's going to be a very different experience with the manufacturer in China. Good luck trying to get something out of them. Because you would have to have like pretty much unlimited money to try to get something out of them, to figure out like the international nuances. So if from a risk perspective, I would say like try to get manufacturers that are stateside. Now, if they are bringing product in from China and they're formulating it, then that's their problem to an extent, because you should collect a certificate of insurance from your manufacturer, and they should list you as additional insured on that certificate. So a certificate is a formal document that's issued by the agent or broker of the client, right? So that in this case, it would be the manufacturer. And then, so for example, if I am ABC Supplements, and then, XYZ manufacturer, and if I go to you and say, hey, Bobby, I want you to do this for me, here's the formulation, and you are accepting product, raw ingredients from overseas. Well, you're a stateside company and you should have stateside liability insurance, right? So if you have stateside liability, that simplifies things quite a bit for me, because if there's litigation, the insurance carrier can go back to your insurance carrier and say, hey, you manufactured this, there's a problem, let's figure this out, basically. It's commonly known as subrogation, but we don't need to go into that, because hopefully you'll never experience any lawsuits, but God forbid if you do, you'll probably hear that term.
Now, does it matter if you have one supplement or 100 supplements? Does that affect the price of insurance?
It can, and yes, it does matter. It's not necessarily a problem to have, let's say, 100 supplements versus one. Just have to be clear with the carrier as to what kind of supplements you have. So if you have 100 different vitamins, no problem. But if you have 100 different vitamins and all of a sudden you decide to bring in kava, that's a problem. You'll see, if you're applying for insurance, and if it's a good insurance, you'll see that there is going to be in the application a list of problematic ingredients, not necessarily prohibited, but problematic. Cannabis, for example, is a problematic ingredient. Is there insurance for cannabis? Yes, exactly. 100% there is. It's a specific insurance company that will take on that particular, kind of supplement. So yeah, it sounds complicated, but it's really not. Like, find a good broker. I know I sound like a broker record. Find a good broker, make sure that the application that they send you or they fill out with you is thorough. If they're asking you like 2-3 questions, probably not the right broker. But if they're going through in detail, like your supplement list, great. We have certain supplement stores, brick and mortar, that sell their own product and other people's product. So how does that get insured? Well, we just have to make sure to classify it, and we just let the underwriter know these are the products that are owned and manufactured or white labeled by the store. And then the rest is, the other people's products. And usually what will happen in a retail situation is, if the retailer is selling other people's products, they're also asking for a certificate of insurance. So it's very common practice to ask for that. We call it in short COI, because people that are selling your stuff, they don't want to answer for your lack of quality, or even if it's not lack of quality, like some schmuck doing what they're not supposed to do with your product. Lawsuits are expensive, and people don't want to be brought into one if they don't have to be. And also, if they are brought into one, they want to make sure that there's communication within the different insurance companies, because they don't want to be on the hook for everything. And that's a very good thing, by the way, because if you have your T's crossed and I's dotted, and you have all the certificates of insurance, your insurance company will likely take on less of a hit. And that's advantageous for you, because the bigger your hit, right? So the bigger the payout by your insurance company, the more expensive things are going to be for you in the future, and the more difficult it is to get insurance in the future. It's not impossible, but you'll pay for it.
So what should someone look for when working with a broker?
Thoroughness. Asking the question of like, hey, have you done this before? Have you worked with supplement companies? And really, kind of wouldn't focus, on a particular either industry or commercial industries. Commercial insurance is very different than personal insurance. Personal lines is a completely different animal, and it's in many ways, in the overwhelming ways, is a lot simpler, because you're basically taking the same data, and all of the underwriters have the same questions. When was your roof replaced? How kind of pipes do you have? Or do you have aluminum wiring or non-aluminum wiring? I mean, this is just stuff I remember from when I was doing my studying. Whereas with commercial insurance, you've got really specific questions like, hey, does your product have any effect on HGH? Like, is your product affecting this, or are you making a health claim? For example, do you have a product for sexual enhancement, or are you making the claim of sexual enhancement? For example, Tongkat Ali, everybody's loving it, everybody's doing it. You should answer yes as to sexual enhancement, because the common thing is, if you Google it, it'll say like boost testosterone, and in return, I guess, and for lack of a better term, you're getting sexual enhancement, right? So just that thoroughness. If they understand supplement, I take a lot of supplements. I'm kind of a health nut, right? And I'm definitely one to experiment. And I ordered NAD plus, for example, and I wanted to make sure that I was ordering it from a reputable provider. So what's the first thing I did is I said, "Hey, you guys have insurance?" And I was like, "You're the first person that's ever asked that question." Because unfortunately, a lot of the peptide stuff is coming from overseas, specifically from China, and it's a very, very poor quality, and it's still very expensive. So I'm kind of forced into those details because this is what we do. It's not like we do just supplement companies exclusively. We do commercial insurance. And when you learn the ins and outs of what commercial insurance is, then you, for the most part, know what to ask. Now, sometimes, and a lot of times, we don't have the right answers. So we reach out to underwriters who are actually putting the policy together and say, "Hey, is this okay?" And we do everything in writing, because just because someone says it's okay doesn't mean that it's okay. We want it in writing because we want someone else to be able to be on the hook if there's a problem, right? So sometimes people misunderstand questions over the phone and they go, yeah, sure. Or they're, busy and they're rushing you off. And in fact, it doesn't have coverage. And I can tell you actually an example of that was we had a company come to us and they manufactured vapes, and they had extraordinary losses. I mean, extraordinary. And the reason that they were having these extraordinary losses is because they were sourcing the vape pens from China, and the batteries kept exploding.
Oh, geez.
So they reached out to another broker, and they got a policy through that broker. And because that broker wasn't super understanding of what vapes are, didn't realize that they were powered by batteries. And what happens? Well, they buy a policy that excludes batteries or any kind of malfunction with batteries. And then, of course, they have another catastrophic loss.
Yeah. And of course, it's going to be cheaper insurance, right? But now they're just throwing money out the window at that point.
Yes, exactly. So you hit the nail on the head right there. So they're like, "Oh, wow, this is so much less expensive than what we had before. No coverage." And there was
then what are you paying for?
Exactly, right? Exactly. And that's really the point. People think that claims are very frequent. They are to an extent, but not really that frequent. And I'm kind of, I guess, shooting myself in the foot here. And you're saying, well, if you're saying they're not that frequent, then why should I have insurance? Well, you never know. And that's really the reason that you're getting it, right? So you can't predict the future. So when you're buying a policy, you might as well get a good one. And really the price difference, this is a small world. You know this, for you, it's a small world. For us, it's a small world. And in the insurance side, it's also a small world. There's not that many insurance companies that are actually going to provide you what you need. So you might as well go with one that's decent, and might as well go with one that actually provides you the coverage. Right? And the way that you can confirm that is, again, looking at the quote and seeing that your stuff is actually on there, and making sure that you're thorough enough with your application. Because it's hard for a carrier to walk back on things if they promised you coverage. It's a contract. Remember, it's the two-way street thing that I was talking about.
Mm-hmm. So every ingredient change, every new product, that's a trigger to go back to your broker or your insurance carrier and update the policy, I guess, or kind of just let them know like what happens there.
I think that's just generally good practice for supplement manufacturers or brands, is just to do that, because if you do that and it's in writing, then you've done what you needed to do, right? And if someone drops the ball because of that, there's a potential leg for you to stand on in the event that it doesn't get covered. Hey, we notified you guys of this and you didn't do anything. And really, that's the responsibility of the broker to send over to the insurance company, because you're not going to be contacting the insurance company directly. In fact, we don't contact the insurance company directly. That's why there's an underwriter. So most brokers are very lazy. And I say this because I've been in this industry for almost 15 years. And I know kind of how things are behind, the scenes. Most of them will probably just see your email and go, that's fine. We don't do that. We don't do that because,
Wow. So they're not even covered at that point
well,
then.
we don't know. So, everybody's got an ego and everybody thinks that they're smart and they know what they're doing. We are an ego. I try to make sure that we are an egoless company because that's where we can get in trouble. I would rather forward that email that you sent over to me to the underwriter and say, hey, is this okay? And get that back in writing and then, in fact, notify you as my client because that takes me 10 seconds. And that also protects me, right? Because if I like to sleep at night, I've got, children, I've got a wife, and I've got a house, and I've got this. I don't need to be involved in your lawsuit because something wasn't done, appropriately or correctly, or it wasn't disclosed to the carrier. We're sticklers about that. In fact, 45 days before a policy is due to expire, in commercial insurance, you don't really see like automatic renewals unless it's workers' compensation. We reach out to our clients and say, hey, like, what's going on? Has anything changed? Have you gotten any new products? Because a lot of times clients forget, or they maybe assume. And in fact, when we bring clients on and there's an onboarding process with us, we provide a do's and don'ts. Like, hey, if anything changes, make sure to let us know. We're really kind of up your what with that, but we're doing that because it's necessary and it's going to take you 10 seconds. Look, if you have products, you probably have ingredient labels, right? Just send us a copy of the ingredient label. Let us get it over to the carrier. And a lot of times what will actually happen is at underwriting, the carrier will ask, hey, we need to see your ingredient label.
What is the average cost for insurance? I know it's probably a huge range.
So funny enough, there is usually what's called a minimum premium associated with each classification. Minimum premiums can start as little as $500. That doesn't mean the taxes and fees are included in that. That's just the premium that you're paying.
Is that for a year?
For a year. Yeah. So all these policies are going to be for a year. That's a good point that you brought up. A lot of times people asking, hey, can I get this for 3 to 6 months or something like that? No, you can't. It has to be a year and that'll be it. So the range it's tough because every product's different. And funny enough, it just depends on where you're located too. For example, California is going to have different rates than Florida, and Florida is going to have different rates than Texas. And those are the three biggest states that we work with. Florida is huge for supplementation for us.
Now, does that matter where the business is like incorporated in, or does that matter? Or are you talking about where they operate from, or where their manufacturer is? Because there could be completely different. Those could be three different locations, right?
Yes, and that's all considered in the application. So it
I
just
see.
depends. Usually, it's where they're domiciled and where they're doing the bulk of their operations. So, for
I
example, they
see.
could be incorporated in Delaware, but they have operations like their corporate is in Florida or California or Texas. So we would base that application off of the corporate, and then we would let underwriting know that, let's say there are multiple locations, like let's say manufacturing is done here and there, and then that makes the process a little bit more smooth.
Gotcha.
Yeah, and also kind of the thing to think about, like if you're trying to get into this business, right, into the supplement business, think of things as risky or not, and you'll be able to effectively predict, to an extent, of course, your operating costs. If you are dealing with a supplement that has potential for side effects, you're probably going to have a higher insurance premium and a higher operating cost. And if it's not, great, maybe your margin is going to be that much better. We don't really do this, but we can, provide some insight to folks that are just starting off. And the reason that we don't do too much of this is because a lot of times we have someone call us and they go, hey, I'm doing this thing. And then when they finally put it together, it's a completely different thing. So we don't typically like to give kind of insight unless your product is actually formulated and you're pretty close to getting to market. And that's also a really big thing, is make sure that you buy your policy before you are hitting the market. Some instances I would actually recommend don't buy the buy the policy before it even starts being formulated, because claims made policies, of which these are going to be the vast majority of, they work a little bit different than what are called occurrence policies. you have to make sure that things are within the policy dates. So effective date to expiration date. If they're outside of those dates, it could be really problematic.
Really? So if you start a supplement company without insurance and then go to fill that gap and get insurance a couple of years later,
Yeah.
there could be consequences.
Of course, yeah. So anything that you sold before your policy went into effect is not going to be covered, with a few rare exceptions. There are what are called retroactive dates. Those are really tough to get. I'll give you an example. We've got a manufacturer, not a supplement manufacturer, but they do detailing products, automotive detailing products, and they're based out of Israel. And they were manufacturing in Israel for many, many years, and they finally went into the United States market. And because they had some coverage in Israel, the carrier was willing to give them, I believe, 180 days of retroactive coverage, because they had already been kind of like launching the product here and so on. And that was kind of the deal breaker or not. If they weren't able to get that, they weren't going to get the policy. And we magically, miraculously, I would say, somehow got it done. There's the thing about the insurance world is there's probably a carrier for that, right? We'll call it that. So if you have a product, as long as it's legal, then you can probably get insurance coverage for it. And we kind of have this, inside joke thing here is if we can't do it, you probably can't get it, because we've got all the major and the smaller players, the really specific ones that are on our books, because really for us it doesn't cost it's just a Rolodex, right? It's your network, and we have a really strong network of people that we can get a hold of and say, hey, got so and so doing this, can you do it? And we send out the email, they go, yeah, sure, here's the application. And sometimes it's their research that they need to do as the wholesaler and say, let me find a carrier for that.
Mike, it's been really informative. If someone wants to go to that next step, wants to get that policy, wants to talk to you about specifics, how can they get a hold of you? Where should they go?
Sure. Yeah. So they can visit our website. It's zagerinsurance.com. I'm going to spell it out because everybody gets that one messed up. So Z is in zebra, E elephant, Y yellow, G George, E echo, R Roger, and then insurance spelled out. So ZEYGER insurance.com. Google us. See the kind of work that we do for our clients. The good and the bad's there. Can't solve everyone's problem, and it can't be effective for everyone. So there are, I'm a very direct, straightforward guy. I can do what I can do for you, and that's pretty much it. Feel free to give us a call. Our number is 818-698-8240. If you're located in the state that we're licensed in, we'd be happy to help you. If we're not, we'd be happy to refer you somewhere else. And then you can also just email me, michael@zagerinsurance.com. It's probably the easiest and fastest way to get a hold of us, or by text, because I'm either on a call or I'm focusing on sending out applications. So it's tough for me to always be able to answer the phone, but we are really good at returning phone calls and really good at making sure that, we walk through what we need to walk through to get you the coverage that you need.
And I'll include all those links and emails and phone numbers in the show notes for those listening and who are not fast enough or who can't spell, because that's tough to spell.
I'm one of those people. My last name's Sendrovich. It's a tough one to spell. So
Thank you so much, Mike, for coming on the show. I really appreciate your time.
Likewise. Thank you.